Hello, this is John Bowen, CEO of CEG Worldwide, and I am very privileged to bring you this week's First Word. And this week, what I'd like to share with you is a huge opportunity to serve your other professionals, CPAs, attorneys, accountants, clients, and to do it in a way that generates tremendous opportunity for both organizations and, most importantly, a great service for your clients. Now, in this segment, what I'm going to focus in on is CPAs. Now, we did a study in 2009 where we looked at CPA firms, just over 200 CPA firms that had been offering investment services for at least 5 years, and they reported to us they were profitable. And we broke them into two different service delivery models. One internally, where they used employees to deliver the experience, the wealth management or investment experience, or collaborative, where they're working with another financial professional like yourself. Then we segmented that group one more time by business model, whether they only worked on investments alone or whether they looked at beyond the investments to wealth management. And let me walk you through the numbers because they're eye-opening. Now, in this study, 203, we did it at the end of 2009. It was for an AIC PA presentation where I did a keynote at one of their major conferences, and I believe it was in February 2010. So we did the study just for the numbers there. And when we look internally, service delivery model, that means they're employees and they only offered investment. The average of all the firms we surveyed, they had a gross revenue of $427,000. Okay, but nothing material, particularly when you consider, and this is important, that it's all their own employees, so what's happening? Probably getting a margin of 20 to 25%. So not a lot of money for putting a whole new business line together. What if they worked collaboratively with you? Well, if they did collaborative and investment only, the average gross revenue to the firm was $997. Now, what's important here is that is their portion. The typical is a 25% revenue share if you are doing all the client service experience. Okay, this is wow. Why is this happening? Let me give you a couple more numbers and I'll go to why. If they offer wealth management, you can see they do it internally, they almost double the numbers, but the margins are still the same, 20 to 25%. But the biggest win is when they work with a very talented financial advisor team and deliver wealth management where you're delivering the experience. Their portion of the revenue is $1,088,000 on average. And now, many of us would say, well, that's almost 100% drops to the bottom line. Now we're talking about accountants, so they're going to go ahead and allocate some other cost, and the cost of the notebook and the desk and all that. But let's say it's 80% drops to the bottom line. Would you rather have 20% of $427,000 or 80% of over $1 million? It's an easy answer. And how this all comes about is because they're working with really talented professionals who understand how to deliver a world-class experience rather than hiring people into the firm and that really haven't had the success in the industry in serving clients well. So when you explore a strategic alliance, I want you to take a look at this and share this with your accountants. Now, where can you get this information? Go to our website and download Building Powerful Strategic Alliances. 54% of the affluent clients tell us that they found their primary financial advisor through another professional. And it's typically an accountant or an estate planning attorney, the most common. This is a real opportunity to build a great strategic relationship. You get to serve their clients well, and you get to do well by doing it. And so doesn't the accounting firm. It's a win-win-win. Let's go out and make a difference. Wishing you all the best of success.